Hi, this is Jack from Alpha Charts with a State of the Market video. Today is Friday, December 11th, 2020, and I'm actually doing this video while the market is still open. It's 11:11 a.m. I have some plans this weekend, so this video is a little bit early, but I think for the most part, unless something crazy happens in the afternoon, most of everything should stick. All right, before we get started, this video is for educational purposes only. These are not recommendations to buy, sell, or hold any stock or security. I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Also, if you like these videos, go ahead, like, and subscribe to my YouTube channel. And also, you can find me on Twitter at AlphaCharts365. Okay, so it's been an interesting week. Here is SPX, always where we start. And as you can see, um, you know, we kind of broke out and then came back, had a quick little retest of the breakout area, right in here, right? Something like that. And so far it's held. Wonderful. That's really what you want to see happen, right? Breakout, retest holds, and we move higher. So let's look at the RSP, equal weight S&P. And as you can see, that one hasn't even come all the way back to retest. It broke out and it's just consolidated sideways, okay? Again, very strong action in my opinion. I think that, this is the beginning of a new run for the market. So let's look at Qs. So I had posted this chart on Twitter. It was just a possibility. I posted actually on this day right here. So I said, I wouldn't be surprised if we come back and retest. I got lucky, right? I mean, no one knows what the market's going to do. I definitely do not know what the market's going to do, but this was a logical thing to happen. So this is exactly what I drew in a few days ago. And so far, it's working out just fine. For me, 297 was the area that had to hold. And as you can see on the low, it went down to 298. So it held like a champ. Lovely. And I still think 297 or so is the area that has to hold. It's also where the rising 23-day EMA is. Prior breakout level, just confluence of areas. So if it doesn't hold, then I think we're in a different type of market. But for now, it's holding up just fine. And I think it's more likely that we are going to bounce and move higher than roll over and go lower. Again, just playing odds here. Nobody knows what the future will bring. Looking at equal weight cues, and it did have again, this pullback was rough, especially for growth names, which I tend to be in. It was not fun at all. But as you can see, you know what, came back, kind of moving sideways, letting the moving averages catch up. Nothing seriously wrong yet. We'll just keep watching and see what happens. Moving on to IWM, again, broke out. And again, it's just kind of chopped sideways. Very strong market, letting the moving averages catch up, normal price action. So that's pretty cool. A lot of people are comparing the S&P, or what the market's doing overall to 1999, 2000. And there's a lot of similarities, so we can't deny that, right? But the markets don't always repeat, but they may rhyme. So one of the things I looked at, and let me go to a weekly chart on this, and I go to a line chart and get rid of volume to make things much easier to see. Going back to 1999, right? I went ahead and looked at all of the IPOs per year because IPOs have been crazy this year, the number of IPOs. So there's just the number of IPOs. And the 2020 number here is through November 30th. And as you can see, we're in that kind of frothy 1999, 2000 number as far as IPOs go. Now, is this the end all be all thing to look for? No, because there isn't one. But, we had a very quick correction here, kind of like very similar to this. So are we in this area? Maybe. But with that being said, if that's the case, and we are in this area somewhere around here, could be another 25% upside, maybe even more. Who knows? So it's not something to trade off of or a timing mechanism. It's just showing that there's a lot of froth and maybe exuberance in the market. Okay. Not one little data point, nothing special there, but it was interesting that we're over 400 IPOs this year, and it's reminiscence of 1999, 2000 type trading. And I'm not a valuation person, but I know valuations are extended and so on and so forth. So we will see. All right. Back to the regularly scheduled programming. Let's look at let's look at XLF. All right, XLF, kind of chopping away, moving higher. It's pretty much kind of leading the markets. I like HYG as a real gauge, and it going back to a weekly chart, you can see it broke out, and is above this area. I think that's a really important area to hold. So I think HYG breaking out, XLF looking good. Let's look at SMH. SMH took it on the chin with the pullback, but so far, all I can see is that this looks like moving averages catching up. We'll see if it rolls over more. If it doesn't, no way to know for sure. But as of right now, the uptrend is still very strong, and there's nothing to be concerned about at this point. Just you're still just looking at this, 10% away from the 65-day, near the top or so, which was probably right around here. You were at 18%. So it closed the gap by almost 50% now. And so maybe it needs to chop sideways more. Let these moving averages catch up a little bit more. Maybe it'll touch the 23-day. I don't know, maybe. But it's an uptrend. I think that bodes well for the market overall. Looking at lumber, broke out of this important area. And now I think all-time highs make sense, I don't trade lumber really. So what am I using it for? I'm using it for a gauge of market, of how good the market is, and tends to be a leading indicator. And as of right now, it's moving much, much higher. Just this little sideways consolidation looks very strong. Let's look at SPX versus TLT. And I'm going to switch to a line chart and get rid of volume. And I don't even care about moving averages. As you can see, it's still making higher highs and higher lows. It's an uptrend. It's a risk on indicator. And so everything looks fine there. IEI versus HYG. Let's look at bond spreads. A little tick up. We had some volatility this week. That's nothing crazy. We're not talking like this. It doesn't look like this. It just looks like a little tick up. Nothing that concerns me as of yet. It goes through these periods where it kind of ticks up a little bit, comes down. It could, move sideways. But as of right now, bond yields, bond spreads look really good. Looking at put call ratio. I was talking about how overheated it was, and it was. And now, we had the nice one pullback. Do we get one more shakeout? Well, it's possible, right? To get back into this level. That's a possibility. But as of right now, even if we just kind of chop around in this area, it's still a bullish range, which looks good. It's not too overheated. And I think that would grind the market higher. And I think that is the more likely scenario. Looking at the VIX. Yeah, so VIX is climbing up a little bit. So it's at 23. It's still underneath my arbitrary green line right there, which is 24.5. It's not crazy. It did elevate because we had some volatility this week, but nothing nuts yet. We'll see if it stays under 25. If it stays under 25, I think that there's not much of a problem. If we start getting over 25, I'll watch my positions a little bit closer. I think that's the best way to put it. But as of right now, VIX looks fine. Value line geometric index, it's climbing up, almost all-time highs again. Looks great. Breath is good. Overall, I mean, it's hard to be bearish this market when it hasn't done anything wrong yet. You could say, oh, this is a top, it's a false breakout. Well, it hasn't proved it yet. And if it hasn't proved it yet, it hasn't happened. And so, trying to front run a strong market where the Fed has your back and they're keeping rates low and they're buying bonds and a lot of liquidity in the market, I think that's a recipe for disaster. I think this market is had a healthy retest of the breakout, and I think that chances are prices are gonna still gonna go higher. 297 fails. I think that maybe we'll be in a different type of market. But for right now, 297 hasn't failed. It's held in the contrary, actually. So that says that this market is strong. Buyers are showing up. And for as strong as for as long as it will stay strong, we're gonna go ahead and try to ride it for as long as we can. And so I think that market looks pretty good. All right. Hope you all have a good weekend. Stay safe out there and take care.